It is Friday, and today we got our Fractional Friday going on. So I got Joseph Catrapalia back. So welcome, man.
Hey, thanks for having me again.
Yeah, and I just also want to welcome you to the school community. I saw you join yesterday, so glad you're going to check it out. But I think a lot of people are going to realize how much great information you just have on the traditional real estate side. But today we're going to dig into fractional real estate, which is kind of what you're digging deeper into, right?
Yeah, no, for sure, I'm still just a real estate guy in general, right? I've been doing fractional stuff for 8 or 9 months now, but I've been in real estate investing for 20 years. So,
Great information you
um,
just have on the traditional.
hoping to talk about a little bit of both in school. I think there's a lot of tools that eventually we can use from. I think it's just a new tool to be a real estate investor. It's not necessarily like a either or like something completely different. It's a way to, or do it in a own little pieces, but also on a future episode, maybe we'll talk about ways that you can actually use some of those tools as an investor, just as as a capital raising tool. So
Yeah, absolutely. I think you're going to bring a lot of knowledge to the school community. So people that are tuning in, like I see Jason and Flavio here, they're in school. So go check out Joseph, go follow him. He's going to probably be putting out some good information in there. Also want to remind people, go check out Joseph's YouTube channel. It's in the beginning of the chat. So go subscribe. But what are we going to do? I really want to know more about, well, quickly, maybe, can you touch, because I know Jared, who's also on the school platform, was mentioning Jeff Bezos. And does he have anything in fractional real estate?
yeah, so Jeff Bezos is a backer or an investor in a company called Arrived Homes. They are, as far as I know, the biggest fractional real estate platform. Last I checked, they had around 500 properties that you can go and buy into. Um, it's a site that I spend a lot of time looking on, and I've just never pulled the trigger and bought anything on it. They very much are focused on the safety and compliance, and not that those are bad things. I'm a very conservative investor, but they end up just not having good returns because they've spent a whole bunch of money on, they actually are selling securities on their site. So they take the home, they put it in its own entity, they cut up that entity, they create actual securities and sell them through a broker dealer. And by doing all that, you can imagine it's a lot of expense to add to one single family home. And so, without doing any like of my own due diligence and digging into the property, if I just take their word for what the returns are, I'm just not excited about the returns, right? So I think it's really a good sign that they are in the space. But at the moment, they haven't figured, and they just seem to be buying random homes, right? Like they're they're not executing a great business plan as far as really, they're not doing the work, right? Like if you watch Zuber always talking about doing the work, right? They're not doing that, right? They're just like, oh, there's a home, I have money, let me buy it and put a tenant in it. And so they're not buying, they say they're really digging into markets and they're looking for like outsized appreciation type markets and locations. But yeah, if I'm going to take the time to learn a new system, to go, buy stuff online, invest in somebody else's deal, I want a fantastic deal. I don't want a 4% cash on cash, and they say I'm going to make 10% because it's going to appreciate six more every year, or something like that. It's just not. But it is, I think it's a really good sign that they're in this space, um, for the future of this, and that a ton of people invest on there, right? So
Well,
I
I
don't know.
think like Zuber always or they kind of joke about, like, and maybe they're using Jeff Bezos' name, right? But usually maybe the bigger the name or the bigger the operator, the smaller the returns possibly, right? It's,
Right. No,
lower
it's a
fees.
it's 100% what's going on. They're trying to make it just feel like, oh, this is like this just safe thing. It's this guy is doing it. He's real rich. Why don't you do it too?
All right. So I know you brought two deals because I really want to dig into, because the issue I'm having is there's just so much information out there. So like when I
Yep.
go to these platforms, I'm trying to figure out, even which platform I want to use. So I don't know what direction you want to go first. Do you want to look at some of the deals you brought, or
Yep.
Trade Better does have a question though. He says,
Okay.
"Hey, good morning. Also, Trade Better has also joined your Discord. I'll put that Discord in the chat also if people want to check it out." But
Oh, nice.
Harrison said, "Joe, how do you sniff lofty scammers like?" I won't say the name out, but you probably know who he's referring to.
Well, there. I mean, and it's very well known. If you jump in Lofty Discord, they talk about this guy constantly. Um, you know, a big part of I identify. So there is this guy who scammed the site in general, like took over. I mean, I don't want to get into too much of the details. Um, I actually did a whole video on how to identify scammers in general, like how to identify people that are, you know, committing fraud against you, because you run into it in real estate all the time, right? So there are a whole bunch of different ways. I'm just going to give you the number one because I think I don't want to talk the whole hour about it, but I think the number one way that you can tell is when you ask direct, very simple questions, and you don't get, like if I'm asking about, okay, what is the number for this turn repair? You know, what did we get for our estimate for this? Right? What's budgeted for this? And we get a paragraph instead of a number. I think that was a really good sign early on with him in particular that there was something else going on, right? Like, I mean, I was asking very simple questions that any real estate professional that was actually running a deal properly would be able to just give you a simple answer for. And instead, we either got references to other things or his system in general. So I think that, to avoid that, um, yeah, that's my number one tip. I did do a whole video, like hour long, on different things that were red flags for me with that particular one.
And that one's
Um,
on your YouTube channel?
that is,
Okay. So everyone, like I said, I put the Discord link and the YouTube link. So go subscribe to Joe's channel. You can check out that video about scammers.
yeah, and if
Uh,
you're looking for the thumbnail, it's got the old American Greed logo on it. So I don't
okay.
remember the name of the video actually.
All right.
But
So let's
yeah, it's definitely so the platform I'm going to show you deals on today. It's called Lofty. They call themselves the Nasdaq of real estate, but I think that if you really want to not be disappointed in the site, you have to think about them as the eBay of real estate. They're a platform that anybody can bring a property to. Because of that, it's the platform I'm getting the best returns. And so, what I did, I brought two deals that I want to look into. I'm going to use one to show you kind of like all the things that I want to look out for and ways that like something looks great, but it maybe it's not. But I don't want to be too much doom and gloom, so I brought one that I exited last night that I got 55% ROI on over a 6-month holding period. So, uh, there's really great upside potential. Um, but, I'll get into that a little bit, but I want to, most of what I'm doing with my channel and why I'm talking about fractional real estate, it is so easy to get hurt, right? Like uh, um, there's a lot that people misunderstand. There's a lot of due diligence people are skipping. There's a lot of people just taking like certain numbers like as, oh, that's the number, and not really digging into each one. And so that's what I try to focus most of my time talking about is like, hey, these are the things we want to look out for. So hopefully we can do a little bit of that today.
Yeah, absolutely. Yeah, I think this is exactly what I want to dig into because, like I said, I go to these platforms and they're all slightly different. I'm not sure what I'm really looking for. But also, people that are tuning in, please bear with us. I don't normally share screen, so this is also practice for me. So Joseph is gonna take over right now and kind of share his screen and show us some of these deals he's been working on.
And one other thing, and I always like to just mention this too, is just because I do or don't buy something doesn't mean that any of the viewers should, right? Like this is something that everybody should do their own due diligence on every single one of these deals. I do a lot of these due diligence videos, but I'm just never going to be able to see every single issue, or I'm doing like a 30 or 45 minute video about it, It's not something that somebody should take that and be like, oh, that's the answer, let me buy this or not. All right, can you see my screen now or no?
Yes, I can.
Okay, fantastic. I got it on my phone, but it's a little delay, so I'm just seeing the screen itself. Um, so this is a property that came to the platform. To me, this is a perfect example of um, what somebody might jump on here. See, this is a short term rental. This is, and just to get away from the scam or fraud discussion. This isn't any of that, right? This isn't something that I think somebody has any ill intentions. It's a property that's brought to the platform that I just think um, doesn't make the most sense. But like when I first opened this up, I look at, okay, that says it's a 15% rental yield, right? Which that sounds fantastic to me. On Lofty in particular, all of the deals, $50 is like par value. Like all the properties are originally brought at $50. Um, so you can see this is already trading at a little bit of a discount from when it originally came on. Like, if I'm brand new to the site, I don't know anything about it. I look at this property. This looks like a fantastic short-term rental, right? Like um, I'd be pretty excited about this, right? I see this property. It looks nice. They're telling me it's a 15% yield. Um, and unfortunately, I think that a whole bunch of investors, this is the extent of their due diligence, right? They look at the picture, they look at that yield, and then that's it, right? But
Do
there's a
you
couple.
try to look at like are you only doing short-term rental ones, long-term, or is there like, are you trying to stay in a certain like what Zuber said, like a buy box in a sense?
So for me, um, I don't. I have a very. I actually, what it is I actually have several different buy boxes because one of the main advantages of doing, like when I invested in real estate in general, I always did have a very specific buy box. Like I started off, my first property was a duplex. I always did single family homes or small multifamily. I think we talked about it a long time ago on your channel. I switched to doing private mortgages. That's probably 5 years ago now. And so then I'd look for stuff that I could buy, sell immediately and create a private mortgage on. So I'm a very big fan of having a narrow buy box and really executing when it's me doing the deal. Um, but in this world, like I don't need that quite that same level of expertise. And so I've I have probably four different types of deals that I look at, and have different criteria for each, and even on different platforms I'll have a slightly different criteria because the structure of the platform has made it so maybe it's a little bit more risky in a certain way, or maybe the yields work differently. So I'm typically either buying short-term rentals, I'm buying co-living or pad split style rent by the room properties, and then I'm buying a lot of uh, distressed long-term rentals on here. And that's what I'm gonna the deal that I'm gonna show you after this one. It was a distressed. I think it was a triplex, but it is so it's kind of a range, but it's because it's a lot easier to dig into each one. If I were trying to look at properties in real life and I'm going to go to visit them all, and I'm going to really be the one to execute on the business plan. Uh, I think it would take too much brain space for me to do three or four styles of deals at a time. But because it's because of the structure, I'm able to really get more. And at the same time, too, I think it's one of the main benefits of fractional real estate is you can get wide diversification, and so it makes it so I'm in multiple markets. I think the last time I checked, I'm in 14 different states. And then across those different multifamily, single family, short-term rental, co-living. Some of these are more like a flip, even though it's not really a flip. So it is weird because I don't have the same sort of narrow buy box that I'm used to. But for each type of deal, I do have specific criteria that I'm looking for.
All right. So this is the one that you said you exited.
No, no. So this is the one I want to show you, like, things to look out for, because
Oh,
on
okay,
the
okay,
surface this looks like a great deal, right?
okay.
But there are and I think that, like, is this this is a property I'd love to own a piece of, but if it was priced right, right? And so this seems like it, but so this is the one of the main issues on Lofty is the way let's see.
When you say price, you're saying that like that estimated price that I'm seeing there.
So okay, yeah, I guess let me break this down how this works on Lofty. So $50 is the par value, like I said. But if you open this order book, you can see how many total tokens are outstanding, right? There's 27,624 tokens. Yeah, I should have thought about really starting from scratch on this. So if I have 27,624 tokens, and this is the market cap at $50, right? So they actually calculate it for you, but I'm just going to do the math because I want to make it really clear, right? I multiply that by $50 per token, and this is how much, if I were to buy all the tokens available, I'd, to own the property, that's how much I'm paying for the property, 1.381 million. And that's where things start to fall apart, right? Because a lot of people will come on here and they'll think about the token price, and they won't really think about the price of the property, right? And so, okay, 1.38 million, right? Let's just call it 1.3. I know that's rounding down, but the math still really falls apart even at that. So, if you click on their financials tab, you get this underlying asset price. So this is the price, that they're saying you're paying for the property, and then there's often additional costs. Now, this one doesn't have it. A lot of times, when you're buying a short-term rental on this site, there'll be another big chunk of money that you're spending for the furniture. So they've got it lumped into the total price, which is nice. Um, they give you this full set of documents. Um, where you have the appraisal, you have, and all this is available to you before you purchase it. Um, this has been up for a little bit. Yeah, this came to the market about 5 months ago. You can go through, look at the whole appraisal. I encourage people to do that, every time. Hoping, yeah, but you can see this actually appraised at 1.313, right? But they brought it to the platform at 1.379. So why do they do that? They're allowed to list it up to a 5% premium over your appraised value when you're bringing a property to the platform. Um, and most people that bring it on here do that, right? And so you're almost guaranteed, if you're buying a new listing at the $50 par value, like this one was 5 months ago, you're almost guaranteed to be paying 5% more than the appraised value for this. And that's assuming that this token price hasn't gone up above 50, right? Because as the token price fluctuates, the total price you're paying for the property is fluctuating, right? So already, from a value perspective, I think we're paying too much for this property. Um, at a certain point, if that were the only issue, I might be okay with it, because if I'm buying this for yield and I'm buying it for the long term, maybe that 5% is the price I pay to have a completely passive investment. Like on some of the other platforms, they do have an upfront fee, and it's in that same range. But on that, if they're presenting me a fantastic deal and they're putting it together for me, maybe I'm okay with that, paying a little extra for it. But the way that this platform works, I really don't like it, right? So almost always I'm buying at some discount to this value, right? Like if I click buy today, I'm going to be stuck at this price. But I'll show you in a few minutes another one where I bought, because this price fluctuates, right? It changes with supply and demand. And so what I'm looking for is, and you can see even this one, there was a time in the last couple of weeks that I could have bought tokens in this for $46. Which, that's like what is it, for 8% discount or something? It's not, or $5 is 10%. So yeah, around 8% discount. But for me, that wasn't quite enough to want to jump into this. But a lot of times, that's what I'm doing. I'm digging into a deal up front, and then I decide, okay, I don't like it at this original price, but on Lofty they continue trading forever, right? And so when somebody wants to exit, if the price is right, I might be a buyer for it at that point in time. But so to get back into why I didn't buy this particular one. So when I'm looking at short-term rentals, the number one financial metric I'm looking for is what is the revenue to price ratio, right? Like that's the easiest way to look at every single short-term rental and rule some out right away. And so for me, I want to be pretty close to a 20% revenue to price ratio. If I'm in a great market and there's other things I like about it, I might get down to like 18 or 17, somewhere like that. But so let's be really generous and say I'm going to take a 17% revenue to price ratio on this. So if I've got to look at, I look at the underlying asset price, not the total investment, because when I'm comparing this to properties in real life, I'm usually comparing this number to the purchase price, right? So I'm doing this 200 times 0.17. So that means for this property to be a good deal for me, I'd want to have $234,000 in top line revenue as a short term rental. Minimum. And really that's a pretty low number. Like everything would have to be perfect for me to want to buy with that number. But then when we actually look in their financials tab, their gross revenue is $150,000, right? And what did we just say? 220 or 234. So we're $80,000 shy on that, right? It doesn't make a lot of sense when you first get to this platform. Like, well, how are they paying me out? Like, if I bought this in real life and I'm using I'm using today's debt, I'm underwater on this deal. Like, I'm not not underwater in a sense that I owe more than it's worth, but underwater in that my net income is going to end up being lower than what my debt is. But somehow they're paying this out, right? And the reason they're able to do it on these deals is because Lofty structures them very weird. So when you go down to and so hopefully I know I'm jumping around. There's a lot I want to talk about on the platform, but I want to just give I think this is one of the first things that you really need to understand about it. If there's debt on the property, where do we have it here? I'm gonna search.
Okay,
There we go.
as you're searching, Joe, Trade Better does have a question. How do you plan for taxes when cashing out? Do you have a crypto CPA?
So you do on this platform, they give you tax forms at the end of each year. The ones I got were wrong, and it turns out the ones that everybody got were wrong. They are they aren't including everything in the basis, and I brought this to their attention, and they said going forward they're working on it. So it is a little bit of a mess. This is the first year in my whole life that I've extended my taxes, and I've always run had like my own businesses and a lot of Schedule E's and still managed to get my taxes filed on time. But all the fractional real estate stuff has led to me extending it this year because and this site in particular was the reason. I realized that I track all my own basis and everything, and realized that they were underrepresenting my basis on ones I exited on. So it is something you definitely have to keep your own set of records, and then just make sure when they give you on this site in particular, they give you two tax documents that consolidate every property you've bought and sold on the platform, but then they give you your backup data on how they put those together, and that's how I was able to realize, like, oh well, you didn't include there's a whole list of costs they weren't including in the basis side of things that made it so it looked like I was making way more than I actually was. So it's certainly a concern. It's one I think that they're fixing on here. On a lot of the other platforms, you're just getting a what is it? Your partnership return. You're just getting K1s for on the other ones, as if you're just a partner in the entity. and so those are relatively simple. It's not like you have to track all the platforms right now that I'm on, except with maybe one exception, are giving you some tax document at the end of the year. You definitely though want to reconcile it with your own records and make sure that that it's accurate. But they're at least giving you the framework for, okay, this is how we're looking at these. Yeah, it is. I mean, so one of the things, this is a very messy industry at the moment, right? Like the ones that have been in business a long time have been doing this like 3 or 4 years. Um, and so there's a lot that still needs to be worked out. It is why, even though I'm investing on these platforms, I still really think of it as being, an experiment. Across all the four or five that I have money in right now, I have about as much as I'd put into one. Um, if I were going to buy one short-term rental here in San Antonio, it's about the same amount of cash I'd invest that I have spread across all these platforms, right? So it is very much, uh, there's a lot of kinks to work out, and so I'm not betting the farm on this yet, but it is. Early indications are that I'm going to be able to get great returns in what seems like a relatively good risk-adjusted way. But yeah, there is a lot of messiness and sort of having to figure out some of this stuff, and taxes is going to be one of them. Like I said, some of the platforms have it really worked out, and you might get, 10K ones if you own 10 properties on that platform. Lofty has tried to be a little bit innovative, give you one or give you two tax forms that encompass, I've got 31 properties or 32 properties on this site right now. But by doing that, they're still working through how that should work. And I do have a CPA, but I've used a CPA for years, and he's a bright guy as far as like understands real estate stuff a lot. I do think some of this is still going to be a little bit challenging for him.
Do you have like a checklist or framework that you kind of use for all the platforms, or is it like one stand? Like if you're buying on purchasing on different platforms, do you kind of have the same framework where how you're evaluating the deals, or does each platform kind of vary?
Each one is going to be a little bit different. Like, and so that's why I picked Lofty, because this is one of the most popular ones out there, but it's also one of the most um, confusing to get your hands around initially. And so I thought it would be a good one to just show like why you can't just come on and just buy whatever you see. And I think like if you can figure out Lofty, you can pretty much figure out how to use, all the rest of them are going to skew more closely to investing in real estate, directly. This is one where they've just made some odd decisions on how they want to structure deals. It makes it, they've done it, I believe, so they can just pump up yields, because their typical investor on here is someone who's come from the crypto world, not someone who's come from thinking about real estate investing and jumping on here. And so because of that, there's just and I found as I've been on here, there's more and more of us like pure real estate guys getting into this, but it seems like it is crypto guys just trying to reinvent real estate investing. Um, and sometimes like the mistakes that they make and the issues that you run into, it's just really clear that that's what's happening, right? Like it's like, oh, there's a very, well-known way in the real estate world that we would have avoided this particular issue, but because that's, they don't have any experience in that, they don't even think about it, right? Or they don't even realize they're opening themselves up to certain issues. So it is, um it is why I think this site is one of the most dangerous to, that you really have to dig into everything and truly understand the structure. But it's also why I'm going to show you the deal that I exited yesterday that I got a 55% ROI on. So, it's just like that. The risk and reward is there as far as I'm concerned. It might not be for everybody, but you have to really, this is the least passive platform, and it's one that you just really want to dig into exactly what's going on. um and so yeah, and that's what I'm really just hoping to share, right? And so uh I'm going to just jump back into this unless there's
Yeah.
unless that
Was there any more red flags on this one that you were looking at, or?
yeah, well, and so I want to show you as far as the reason that they're able to pay you that yield, even though the property doesn't seem to be spitting out money, is this section here, right? You always want to look at the property leverage. It's got a loan balance. It's a relatively low loan balance, right? If you know this is relative to the price, it's about 50% levered. Um, but this is where all the magic happens on this platform. So the seller, Mark Johnson, so that's the person who brought this property to the platform. He makes the loan payment still, right? So he's selling equity to this property on the platform, but our entity and the entities on this platform are referred to as DAOs. They're decentralized autonomous organizations. The DAO that owns this real estate isn't making the mortgage payment. The original seller is. And so because it's basically like um but and let me show you this here. So this is the part that takes some people some time to wrap their head around. So I showed you the total tokens outstanding are 27,000. Well, there's only 15,000 in equity tokens, and the rest represent the debt. And so when there's cash flow that comes in on this property, the full cash flow gets spread out across these 15,000 tokens, not across the 27. But the so you're getting the benefit on the equity side of this being levered, right? Because the cash flow is only getting sent out to the equity, but you have this third party who's responsible for paying the mortgage. And so that's how they're able to give you this crazy high yield, even though it's a property that if you put traditional leverage on and you bought it as a straight up investment, um, it would never it wouldn't make any sense, right? Like maybe you'd have a positive cash flow, but it'd be like 2%. Um, this setup is actually the standard setup they have when there's a mortgage. And so one of the things that I always do, and I think that is a prudent thing to do, is you have to back this out and look at, okay, if that seller at some point decides to stop paying the mortgage and the DAO has to pay the mortgage, what is it? And so what does that deal look like? And that's when you have to actually run your own numbers on these deals and realize, and that's why I always jump straight to that's why I have my rule of thumb. What's that top line revenue number relative to the price, right? And that's an easy way to figure out, to get a sense of, is this deal going to work or not? I actually picked this one because it's not a terrible deal, right? It's a fantastic property. It's actually in line with what I've seen some investors be okay with a short-term rental in real life, but it is not one that I would consider, if you're somebody who only buys great deals, this isn't the numbers are what makes this not great, right? Not the property. Um, but if you're somebody who just got to this site and all you're thinking about is the pictures and the yield, which is really, I think, what 90% of the people are doing, you'd have a hard time not buying this one. But a couple other things that I think are a big mistake that people make, and I'm not going to is well. So one, and I think they set it up this way. So it looks like they're giving you a whole bunch of due diligence, right? Like I can click on the guy's name. Usually it brings up his LinkedIn profile. Let's see if that's what it does. Yeah. So I can read about the person who brought it there. A lot of these, I think it's kind of interesting. There are a lot of like very successful people that are bringing stuff onto this platform. Very few actual real estate people are bringing these deals on. I think they're like, maybe friends of these founders or something. But anyway, but you can look at that. You can look at the deed, the title transfer, their projections that they put together. You can see their bookings. You can open up their Airbnb listing. Like they make it so they give you all this info. And so because they start to give you all this info, I think a lot of people think, okay, this is it. This is all the due diligence I'm doing, right? But like if you think about like their market tab, for example, I would never buy a property if this was all the research I did on the market, right? So on every single deal, I'm always at a minimum going online, finding out, what do the demographics look like in that market? Is it a growing market? Is it a shrinking market? Is it, what size city it is? What all that sort of stuff. You're just not getting from here, and I think are things that you just have to do. In my mind, I think it's required due diligence. But I think the trap of a lot of these sites is, and I don't think it, I don't mean that in a malicious way, but I think that a lot of people, because they're throwing so much information at you, they just get stuck on what I call on platform due diligence, right? They just look at everything that the people shared with them and they don't look at anything else. I'm always, looking at that market data, always like, for example, bringing up the FEMA flood map, wanting to look at that, always looking at the natural disaster risks in a market. Like if it's a market I'm completely unfamiliar with and I want to know those things. um I also, like I just showed you, well, let's look at what their revenue is. I'm always pulling this up on AirDNA and making sure, like, let's say that it did hit my 20% rule, right? And so it passes that rule of thumb hurdle, and I think this might be a good deal. Well, then I want to go to a third party source and confirm that this is a real number, right? Not that they just had it filled up really good last year, but it's not going to stay. Um, that is one of the things on Lofty that is very misleading. Most of their numbers, even though those show annual numbers, is they're only annualizing whatever happened last month. And so that's one of the biggest traps with short-term rentals, because somebody will bring this to the platform after their best month ever, and then Lofty will annualize that best month ever. And if you know about short-term rentals, you know that that's that month isn't going to be repeated every month forever, right? Um, so there's a lot of these little things that you can see, uh, that you just really have to dig into. One, I mean, obviously read every single thing that they give you, look at the appraisal that they give you. There's, at the moment, they don't have a very standardized P&L. This one actually looks pretty good as far as, if you're a regular real estate guy, it looks like what you expect for a P&L. Some of them are just terrible as far as, really hard to follow and whatnot. But so if they do give you one that's really hard to follow, you want to back it into a format that makes sense for you, right? So it is, you're doing a whole lot of work on these, or at least I am, in the same way that I would if I'm going to buy a property in real life. And I think on really on every platform at the moment, this is what I'm doing, because it's really easy to look at, just pull up the site, look at the yield that they tell you it's getting, um, and believe that. But if you do that, you'll end up with, well, let me show you this. Right, if I go to their marketplace, um, and I always like to use their list view, and they have, you can sort by yield. Okay, so they say they've got these 32% yields. I'm not even going to debunk that at the moment. But if we scroll through, you can see they have property after property that currently have a zero yield, right? And that's because these are all properties, they're always annualizing last month, right? And so if you had a big capital expenditure, if you had a tenant turnover, whatever it is, I mean, it's like, uh, but none of these properties came to the platform advertising a 0% yield. And so one of the things that you have to do is actually look at the long-term performance of the property, but it doesn't really give you the opportunity to do that. Um, I think, there's definitely a whole lot more that we could dig into on the individual property. And I don't mean to beat this property up. This is definitely, it's nowhere near close to the worst property on the platform. It's just one that I think looks really nice. It makes sense why it should be a short-term rental. The number on the surface looks good. Um, but it's not one that I'd invest in at a full price because of what I mentioned, right? I think you're paying 5% over the appraised value. The yield is really only there because somebody else is paying the mortgage. If that ever went away, you'd have a serious problem. Um, but I want to make sure. I know we both have to get going at 10. I want to make sure I talk about. Okay, so that's a lot of stuff to worry about, right? So why am I still on this platform? Um, and this deal right here, deals like this is why. So this is it was one of the first ones I started buying. Um, let's see. This is I don't even remember, but whether it's a duplex. It's a 3-unit property. When I started buying it, the token prices were around $25. And I did a little spreadsheet on this because I think I'm a nerdy math guy and I want to see this. So these are all the token purchases I did in this property. So you can see, I started in September, maybe August or September of last year on this platform. It was one of the earliest ones I bought. You can see, so my per token price at that point was 28.47. You can see, that's relative to $50, right? Like $50 is par. And so when I'm picking them up this cheaply, that means somebody else bought it for 50 originally. The property's not performing the way they want it to, and so they sold it to me for this low price. And this is where right now on this particular platform the real opportunity is being this. So they did that because the yield is zero, right? Well, this is a property that has tenants in it. They're tenants that are paying rent, but there had been some turnovers, and so there were some capital expenditures. And as the properties on here are refilling their operating reserve, they don't pay out any yields, or depending on how high the reserve. If it's until it's at least 50% full, they don't pay out anything. And so a lot of the investors on this platform, because most of them are yield chasers, they just dump their tokens when they're not getting yield because they don't really think about that property is still performing. That money is accumulating in our operating reserve. Um, so I don't care that they're not paying it to me. Like, the value of my investment is going up every single month because it's just building up that OR. So it's building up cash balance in the entity. But because of the typical investor on this site is looking at their yield and nothing else, these token prices were all, I made purchases over time. And you can see, I mean, these aren't huge investments I'm making in any of these. I'm making bigger and bigger ones each time, but like this was because this is one of the first ones. And I've made some that were even smaller than this that I've done a couple of exit videos on. But so over time, ended up picking up a total of 67 tokens. Well, why did I buy this one? I knew it was making no yield.
Just
Oh,
letting a Roman Fox from your channel says, "Hey Joe, your screen is still showing Glenn."
oh, interesting.
There is that.
Are you seeing Avenue L now?
Yes.
Okay, I'm sorry about that. I'm gonna have to figure out how to do this right next time. Um, okay, so yeah, this is the property. It's a property in Chicago. Not a market I'm super excited about. Um, but so why did I buy this at $24? Right, I was looking at, okay, there's 10,484 tokens outstanding. I was paying an average of, well, let's say it's 25, average of 25. It shows up higher because it was including all my fees too. But so I multiply that price times 10,484. That implies if I were to buy every single token, that I'm paying $262,000 for this property. Well, what I did is I went online and I looked on Zillow and I looked on Redfin and I looked at other comps and figured out that this property should sell in the real world for closer to 400,000. Um, anytime I can buy something for 260 that's going to sell for 400, I don't really care about much else with that property, right? So this is one that was much more of a flip than it was anything else. It wasn't about the rent to price ratio. This was about, okay, it is a significant discount to the real world value. Um, and so I want to, I want to buy it. And so this is one of the things that's cool on Lofty is, okay, I'm buying in tokens. Me and other co-owners voted to sell this property in real life. We hired a realtor. They listed it for sale. I'm trying to see. Well, actually, let's look what this actually sold for. If I do this, I'm going to have to make sure. I'll
We got
remember.
some Chicago people in here saying, hey, leave Chicago alone."
Oh, don't worry. We're selling almost all the ones that we have. Oh, that's the rental one. Let's see. Yeah, that's leave it alone like it's a market I don't like. I'm
Yeah.
sorry. Sorry about that. Share this tab instead. So we just sold this property for $475,000 in the real world. And so that's what led to, can you not see my Excel either then when I bring that up?
Right now I do not see it. I just see.
Oh, okay. So I don't even know. There's not like a option to share that. Well, hmm. So that made no sense when I was trying to talk to you about my Excel sheet then, where I was showing you stuff. Anyway, so my average purchase on this ended up being around $25 per token. When we sold this in the real world, we just got our redemption money from it yesterday. So they sell it, they settle all the debts of the property, and then we get paid out what's left. I got $40.31 per token. I had, I hadn't made a huge investment in this. I had 67 tokens. So I had spent about $1,700, and then I got a check back or I got actually cash in my account back for $2,700. So sitting on my couch, just looking at a screen, picking up tokens as they became available cheaply, made about $1,000 on a $1,700 investment. Uh, that's what's super exciting to me. Now, obviously, again, it's a small investment I made. But it's because I think if I had been more experienced on this site at the time, I would, like today, if this same deal came up, I would back up the truck and buy all of it. All the tokens that were available at that particular price. Because and that's what I'll have to figure out how to share the Excel for next time. But that's, it's a 55% ROI. And if you use XIRR, which I always like to annualize these things, it's 155% annualized return. It seems silly sometimes to us to like annualize things like this, but so far, every time I've exited one of these, I've had my capital reinvested in another one within a couple of days. That's one of the things that's really exciting about this is you just have zero lazy capital, right? Like if you buy a property in real life, you do a flip, you get your cash back. How long realistically does it take for you to invest that cash again? Like, okay, if I close today and I get my check from the title company, um, I could have had another deal set up, but it's probably not going into that deal for at least 30 days. And realistically, I know sometimes when you're doing 1031, you're doing it quicker, but realistically, even then, 45, 90, 180 days before you actually have your capital to work again. Where, I can cash out of this last night. I've already reinvested a decent portion of it in other deals. And that's so like, the it's what's really exciting to me about this, right? Is like you can look at what your annualized returns are, and you can actually strive for, this is my best one so far, right? So I'm not saying, oh, I'm going to get 150% annualized returns on this platform. Other deals that I've exited already have been like 90. Some, the earliest ones I did were even lower. But on these ones where we're doing like what I just call token flips, where I'm buying the token for cheap, selling the property in the real world, I think it's really at the moment, getting a 30, 40, or 50% annualized return on those uh, doesn't seem like at all to be beyond the realm of possibility. Like it, and you have to do the work on every single one. You have to make sure, like I had to be really confident that we could sell this property in real life for significantly more than it was trading at. Because if not, I'm stuck with a property where we had, a vacant unit. We weren't getting any rental yield. So I don't know. I think that these are the types of deals on this particular platform I'm extremely excited about. Uh, there aren't a whole bunch of, we'll go over in the future. I'll show you another platform that it's much more geared towards buy and hold. But this is the platform that I think for people like me who want to dig into deals every single day and like think about, what else could we do with this too? Because like we didn't have to sell it in the real world. We could get with the other owners and vote to change managers. Maybe our management company wasn't doing a good job. We could turn one of the units into a rent by the room unit. We've done that in some other properties. There's another fourplex I'm invested in. When one of the units turned over, we turned that space into co-living. And so you can get creative as long as you can put together a proposal that your 100+ other investors, vote with you with, to do. And so I think there's really unlimited potential, other than it's just a new industry and there's only 150 properties on this platform. But I mean,
Yeah, and I know you got to run soon too, so you got about 10 minutes, and we might have to do these a little more frequently than, might have to do every other week maybe. I think there's
yeah,
a lot of good information here, but I think you kind of answered Harrison's question. He said, "Well, what is your most favorite win on Lofty?" And I think you did say this was your best
this is
return.
definitely my best return so far. Um, and it's they just keep this was one of the earliest ones I bought into too. I've had, I think, 5 of these exits so far where we sold in real life, and that's definitely my favorite strategy. But I have had some other really good ones where I bought the tokens when it was trading at a discount, and I thought we were going to do this, but then the price just went up on the tokens and I sold and got a great return that way too. And as long as I can get cash out of a deal with at least high teens, low 20s return, I'll just sell the tokens right away and move on to the next one, because that's sort of my minimum threshold for wanting to exit one of these, is about somewhere close to 20%. Um, Especially because that's a 20% ROI on a short-term hold typically. And so again, I mean, it's just a velocity and money thing. The quicker you can keep turning over those 20%, when you annualize that, it ends up being really amazing returns.
And then Flavio also says, "What is the maximum of tokens that you can buy per property?"
So it's going to change. They always bring them to market at $50, and so the total market cap, is going to be the total investment price divided by $50, and that'll tell you how many tokens are outstanding. In any particular property, you're not allowed to own more than 15% of the outstanding tokens. Um, Now, so I think my largest investment on this platform, this particular one, is right around $20,000 worth. So, it is fractional, right? You're never going to be buying these whole properties on here. The most you're going to buy into them is going to be 15%. Um, this is one of the reasons that I think this is a great tool for someone getting started in real estate. If you wanted to allocate a couple $1,000,000 to this platform, you wouldn't be able to make money, because you'd be moving the price of tokens too much with your buys, right? You can definitely do deals bigger than this one, where I was only into this for like $1,700. But I think like when you start to put more than like 10 or 15,000 into any individual property, your own purchases move the price too much to get great deals, right? And so that's why I've been trying to experiment with that. And I have one already where I think I was too big of a buyer in it, and I kept the price a little bit too high. I'm not going to lose money on it, but it's not going to be one of these amazing return stories when it finally sells either.
Maybe our final question then. So from Trade Better, he says, "Joe, when properties on the platform, wait, when properties two on the platform, are the listers putting 100% equity of the property available?"
Usually, no. So these older properties like this one, they used to sell the whole property onto the platform. Now they're committing to always holding at least 10% forever. So they're selling out 90% of their equity at the most. And a lot of people are using this just to, and that's what I was talking about early. How I think this is a tool that us as investors can use. Some people will bring a property to this platform because they need 30K, and they sell 30K of their equity, and they keep, the other 150 or whatever, so they're selling a very small portion of their equity. That happens sometimes. Some people, there's been people that have put money on here, or put a property on here, and really only sold a couple of tokens just to try it, but have it set up so that they can get that liquidity out of their property in the future if they want to, very quickly, right? And it is, um, for relatively smaller chunks of money, you could put, if I've already onboarded my property, I could sell 10K worth of tokens in the next couple of days if I just needed that cash real quick. If I want to sell out all the equity, it's going to take me longer unless it's a really great deal.
All right, yeah. So we're gonna try to maybe do these a little more frequently, but I did put the Joseph Discord channel also in the chat again. So if anyone is interested, go check it out. Come join us. Um,
Awesome. Thanks for that.
and also check out Joseph's YouTube channel. He's always posts. I think, dude, you probably put out one a day now, two a
I
day
try to
maybe.
I try to do one every single day. It's very low quality. Me sitting on the couch like I'm doing now, always sharing my screen, no editing. It's just one take, whatever property I looked at that day, or so I look at a. I'm usually either on Lofty, Mogul, Ground Floor, Sol's Lot, a little bit of Collab, or any new platforms. Right, I love it when people send me new platforms and I can check them out. Um, but yeah, try to do one every day, and just really just sharing the way that I'm looking at deals. And my main goal here is to create a community. It is a very new industry, and I think that the more we can have serious investors in here, not just people that are looking at a number on a screen and thinking, okay, that's the whole due diligence, right? I think the more that we have people that are really scrutinizing deals, the better the industry will get. And a lot of us, I mean, we're already changing some of the platforms. Like a lot of them are new companies, and if even just four or five of us get together and approach a platform and say, hey, we don't like that you're doing this, or we'd like you to do this different, a lot of them are listening to us right now, which is just amazing, but it is because they're so new. And especially depending on which platform it is. I mean, some of them are really open to just, if they see that the suggestion makes sense, they're just going to, sometimes they implement it within days, which is amazing.
And also, like I said, everyone, a lot of people tuning in probably from my side today are in the school community, the one rental at a time. So go welcome Joe. Joseph just joined last night, I saw. So go follow him, go introduce yourself to him. But I think he's going to bring a lot of value to the school community. And so I don't know if you're familiar, but Zuber does have like, I mean, there's a bunch of accountability groups weekly. I mean, he doesn't show up to them, but there's like out of state investing.
Well, that's what
There's
I saw. I see Jared's pop up on my feed every week, and I was like,
mhm.
"Oh, it looks like they have fun in there." So
Yeah,
that's
so I
that's
mean,
that's the
you may
school
want to
thing I
start
see the
a
most often.
you may want to start a fractional real estate accountability call weekly, and
Oh, is
just
that's interesting.
yeah, you could. I mean, I think you'll have. I think I'm sure Harrison would probably tune in and whatnot, maybe Hyder, but you'll have people probably tuning in, kind of checking it out. I think due to a lot of the higher interest rates and things going on right now, it's a way for people to get access to other deals out there, also, right?
Right, absolutely.
But yeah, this was fun. Like I said, I think we might have to figure out a way to get maybe twice a month in now. There
I'm
might
I'm
be,
happy to do it. Yeah.
yeah, man. All right. Well, this was fun. I know you have to run. I have it, and everyone else, I do have another live coming up in 15 minutes. It'll be a little more social media related. I have Tampa real estate agent Bree on. She is killing it on social media, so go check her out. She is putting out some funny reels out there, so she's going viral. So check me out in 15 minutes, everyone. So have a great